Okay, so this video is all about royalties. Now, it usually requires a 2 subscriber independent question, but my man here, I like him. He's a great contributor with comments. He says he stumbled across the ETF Royal, or royalty companies, international ones in various regions. Would be nice to get some more info on it. Alright, so I like the model, and there's even another ETF which I like better, which is involved in that space. If you don't know so this is the Royal ETF. They invest money in a business that they understand, and in return gain a share of future revenue, or they earn money from something that they've developed and then other people sell. And one of the beauties is that there's no operational risk. So in a sense, they're not running a business, but they benefit from any upside. So we'll go. So there's a few of them. I'm showing this ETF. So there's 10, 10, 10, 10, 10. So it's pretty heavily weighted to the first lot. And we'll go through each of them. But just a warning on these smaller ETFs. Like you can see these candles here, these spikes. It's because of liquidity. You can see here. So someone has actually paid up here, up here, up here, when the market price is down here, down here, down here. So just be careful when look on the website. They usually publish like a unit price, market price type thing, and the underlying shares in these things don't move like 10%, 5% in a day, maybe 1%. So just stick your bid at the market price. Don't chase it like somebody has. I've seen it happen a few times. Anyway, that's just a little warning, because otherwise I'd say that's a really bearish candle and stay away. But when we look at the underlying companies, they don't have this chart pattern. So as a general rule, that looks good. So let's have a look at. Okay, so this is wheat and precious metals. So this is one of the stocks in my favourite miners, or GDX ETF, the gold miners ETF. But these guys aren't gold miners. So what they do, so this Wheaton, they get 60% of their revenue from gold and 40% from silver, but they're not miners. So what they do is they've got a portfolio of companies, from like an explorer that they'll give a couple $100,000 to go and drill, and in return they say, okay, if you ever develop a mine, I want 5% of all your gold sales. So from the gold explorer's point of view, they're not diluting, they're not issuing shares to raise money to fund drilling. Bank won't lend them any money, and so it's sort of a win-win. Or they'll give money to a company that's about to start producing, but they need money to get the mine set up, so they'll put 100 million, 200 million to start getting the mine going, and then say, okay, well, we want a percentage of your gold sales for the next 10 years or for life. So you're really backing the people that run Wheaton to know what they're doing. And eventually, over time, once that portfolio's going, then they've basically just got an ongoing annuity stream. And obviously, if the price of gold goes up, or silver, then the amount of revenue they make goes up. Okay, hopefully that makes sense. But I love them, and it's this thing's just going to keep going up. Okay, enough for you gold bug. Okay, so this is another one, ARM Holdings. They're a bit different. They generate revenue primarily through licensing fees. and royalties based on chips. So they've designed something, and then as people sell it or build something off the back of their chips, they get a percentage of sales. Not the greatest of chart patterns, sort of stuck in a range, but anyway. Franco-Nevada, so they're like Wheaton, except they get 60% from gold, 11% from silver, and so they a bit more. They got oil and gas, but it's the same concept as Wheaton, and that's going up. You got this Universal Music. I'm sure you've heard about them. So I'll go and find some kid on the street who's got a good voice, and then they'll back him and push him and publish him and take a cut of all his future albums, live performance concerts, and on it goes. So one of their clients is Taylor Swift, so Universal Music get a cut of everything she does. But again, it's them. They know, they can go and listen to some guy or girl sing in a pub and go, "Oh, they've got talent. Let's go and try and develop her." So the chart doesn't look too bad. It's on support. I don't know how AI copying singers' voices is going to work through with royalties. But anyway, that's why you diversify. That's why you invest in an ETF, have all different industries. Okay, then there's this GenMab, beautiful chart, declining wedge, break, test, support, high, low, break. I'd buy that any day. But anyway, so they develop antibody therapeutics for cancer and other various diseases. So they get a clip on any future drug sales. So it's a bit different to like investing some money in something and getting it later. They've developed something and then take a cut of its future sales. But that looks good. Texas Pacific Land Corporation. So they're one of Texas's large private land. They own a big bunch of land in Texas, and they get a cut of. So 60% of their revenue comes from oil and gas revenues off their land, and from water. So basically, they own the land and they just charge the crap out of people that want to do something on their land. Don't go there. So, yeah, I mean they've got the land and they just take the money. I don't know why it's been hammered. But anyway, it's forming a very bullish long-term bull flag. Actually, you can see there it's like this previous high, so that looks like a buy too. Alright, so Royalty Pharma, so they're more like the other one. So they provide upfront capital to biotechs, pharma companies in exchange for future royalty streams. So they're a bit different. Looks like they've had a few issues, but they're now starting to get on with it. So all in all, if you put them all together, it's looking nice. But I'd my preferred exposure, like for royalty companies, would be the miners ETF, which has that Wheaton and Wheaton Precious Metals and Franco-Nevada in it, along with actual gold miners. This is the miners over the royalty company, so you can see it's outperforming it. a specific request to benchmark against the King ETF MVR. It's my King base MVF. And anyway, we're not about MVR. So here's MVR over Royl. So MVR has broken. Test. Had a pretty weak, average week last week. So MVR is will outperform Royl. But like, if you really, this miners ETF. We do the comparison. So this is miners over the King, and miners is outperforming the King. But I expect that there's a number of ETFs like SILJ, GDXJ, that I reckon will outperform MVR. It's just that MVR is a big solid block for a resource exposure, of which I'd definitely be because it's overweight iron ore. So you got to add some uranium, some rare earths, in this case some gold. Okay, all right. Well, that's enough. Hopefully it answered your question, mate. So.